I bet. Welcome to class. Class in session. What's good, my young niggas? You feel me? Y'all are going to be trading with your Professor Sham today. And today we're going to be talking about liquidity. And I'm going to be giving y'all live examples and breaking it down in a simplified way like I always do. Yeah, you feel me? Clap it up for a real one. All right, let's get into it. First off, now what is liquidity? Now liquidity, it can be looked at as a magnet to the market, where the market is attracted to. Some people say orders sit there. It really doesn't matter. I just look at it, that's where the market is most likely headed to and trying to grab, right? So let's put it down in a simpler form, right? Hey, let's say you going out Saturday, right? What's liquidity, right? What's gonna be liquidity? The parties, my nigga, the pool parties. Summer coming up, so pool parties gonna be liquidity. You feel me? Everybody gonna be attracted over there. That's where all the girls gonna be, and if you a girl, that's where all the niggas gonna be. That's that simple. So boom, I'm finna tell y'all and show y'all live. So we looking at it in our turn. We gonna put it down like, where is everybody going right now? You feel me? If you trying to find out, you trying to go outside, you just got cheated on with the weather. You trying to figure out where the new hot place is, right? So boom, you hear that over there on 63rd Street. Dang, I don't know why I said 63rd. You hear that over there on the 16th Street, they got a whole little mansion over there, got straight pools and all of that, right? So the market see that, oh, as a trader, as a trader putting in the trader form, you see that the market is going to move towards that pool party down here. You see this where everybody is sitting at, right? This was everybody at. But as you can see, it seemed like we came over here, everybody seen the party was lame, my nigga. And what happened? They left. Cause they hear that now over there, not on 16th Street no more. This party ain't really nobody here like that. This thing ain't really as big. The house ain't really big like we thought. It's kind of lame. Ain't the music? They playing country music, my nigga. What? How we supposed to get into that? So everybody hear that. Oh, you see a little. They hear about this other little small little club or something over there. People like, let's check this out. Nah, they don't want to go to it. They bounce back. They regroup right here, right? This is where they regroup at. Then they hear about another pool party, right? Oh, this thing jumping. I'm talking about SZA finna be there for all of my shorties they're watching. Oh, I'm talking about who else? I don't know really. Stephen Curry, LeBron James. You get what I'm saying? They finna be there at this pool. So everybody in this, it's a free commission or like $5 to get in. Everybody going that way. You feel me? So what? Looking at it in the market form, the people are coming over here. They're just grabbing orders. They just checking this area out, trying to see if, do we like this this price right here, right? Do we like this price? And we don't really like it, so we gonna get out right here. We're gonna get out right here, and we're gonna try to go out higher prices. Also looking at the market is buying when it's low. People buy when it's low, and then they sell when it's high. Okay, that's all liquidity is. But now, okay, that was the little simplified form. So let's talk about the live form. Let's go into the markets, give y'all actual live trading forms and stuff like that, so y'all can understand it more. Here, okay. Now, how do you mark out liquidity? Let's delete some of these drawings right here and stuff like that. Let's delete these drawings. So, how do you find liquidity and how do you mark out liquidity? All of that. Most of the time, when you see people say something about liquidity, they talk about a swing high. Okay, they talk about a swing high. Now, you don't know what a swing high is like, or a swing high or swing low is the peaks of areas where the market was going. So this would be a swing high. This would be a swing high. Swing low. This would be a swing high. This would be a swing low. Like that. It's just highs and lows that the market was that it went to. Okay, so you can look at those as good forms of liquidity. One thing I love though, and this changed the game for me forever, is previous thing. I did not mean to do that. Previous time frame lows and highs. Now, what I mean by that is when you are trading, you should know this, but I'm going to tell you if you don't. As a trader, there are different time frames of sessions, right? So you got the Asia session, you got the London session, and then you got New York session, right? Asia session starts at 8 p.m. Central Time, 8 p.m. Eastern to 12 a.m. Eastern Time. Then, no, it's not 12 a.m. It's 11 a.m. Then at 12 a.m. to 5 a.m. Eastern Time is London session. And then you got a little pre-market for like 2 hours. And then at 9:30 a.m. to for the rest of for the rest of the day really, until Asia open back up. You have New York time, okay? And these boxes indicate these, so you don't have to remember the time frames. This indicator is at this indicator name is ICT kill zones or pivots. All right, so if y'all boys want to know what that is and stuff like that, there you go. Boom. Right. Cool. So what I like to do when I trade is I like to mark out these highs sometimes. Sometimes I don't necessarily have to mark them out, but I do. Okay. Now I'm going to teach you how to implement this into your strategy as well. Okay. So if we looking at this market, right? We looking at this market. What do we have? Okay. Let's mark this out. We have a change in the state of delivery, which if y'all, I'm gonna make a video on that real soon. Have a change in the state right here. All right. The market. Hold on. Let's change this. I don't like that. Dotted dash line. Dash. All right. So we have a change in the state right here. After this change in the state, what do we have? We have a pullback, which most of the time happens. Why do we have a pullback? What is the pullback? We're grabbing liquidity up here, because what was this right here? Our previous time frame, our previous swing high. As you can see, we have a liquidity sweep. Now, a liquidity sweep is where the market went to, but it didn't stay, right? So we sweep this. This is why we have this huge wick right here. We sweep liquidity right here. If you hear a liquidity sweep, it's most likely because liquidity came to this area and it didn't stay there, or the market came to this area and it didn't stay there. Once we see that we have a liquidity sweep, we have a change in the state, we have a pullback into liquidity being swept, you can catch this trade right here, have your get in at this next candle, aiming for these lows that we just took out right here. So we have at a psychological number 830, just like that, and you can have your stop loss right above that wick. Boom, this trade would have accumulated you. I can't do it right now, but this trade would have gave you like 50 times. This would have been like a $1,500 trade. You get what I'm saying? This would have been a $1,500 trade. And what did you do? You seen that we had a change in the state, liquidity sweep right there. Where are we going next? Where the next form of liquidity is at. And as you can see, when we get to this next form of liquidity, we have a reaction. We sweep these lows. We push back up. Why are we pushing back up? To grab more liquidity to push down, right? Now, listen, when you are a trader, or when the market is moving, right? The market never moves in a up pattern. It doesn't just go like this. It doesn't do that. You know what I'm saying? The market tends to move in a staircase pattern, right? Because if you want to move, for the market to move up, it has to go down. So if we want to continue higher, we have to move down right here, then push lower, right? Then we have to move down, grab some more liquidity that's over here, and push higher like that. The market moves in a staircase pattern, not in just a up and down pattern. We don't move like this. We don't move like that because we wouldn't go anywhere. You feel me? We wouldn't go nowhere. So yeah, let's delete these. Delete those. Cool. Right? Now, let's keep on trading. Let's keep on doing these trades, right? We see that we are in a downtrend. Okay, now, like I said, I'm gonna show y'all live trading examples. So what do we see now? We see that we are in a we are in a downtrend, right? We mark out that we are in a downtrend. Okay, what are we doing, right? We see that we took out this form of liquidity over here, right? To respect, we kind of have a change in the state. We have a change in the state, right? But we have had huge selling pressure, right? We have had huge selling pressure. And we want to look over to our left just a little bit more, right? Because the reason I say that is because why we have more liquidity that is sitting over here. You feel me? That it's still relevant. You feel me? These lows have not been taken yet. As you can see, these lows haven't been swept, right? We haven't came to these lows. So the market tends to want to take out these lows before we move down or move up higher. Like I said, you have to go down before you move up, okay? So we see that we still got sell side liquidity over here that we will want to take, okay? So personally, I'll wait for the next candle. Boom. What this next candle do? We grab liquidity, we have a liquidity sweep, and we also are respecting a 5-minute fair value gap, or 5-minute fair value gap right here. We're respecting this 5-minute fair value gap that we have, right? Sweep of liquidity, tap orders over here. I would get in at this candle, right? Following the trend. Where would I aim for? Next form of liquidity, right? Have my stop right, right there. Take profit down here. Boom. Nice little 2-to-1 right here. This is a 2-to-1 trade. Nice little 2-to-1 trade right here. Boom. Let that bad boy play out. And boom, TP hit just like that. And as soon as we come down to that low or this form of liquidity, what we have now, another reaction. Okay, have another reaction, and you just want to consistently use that. You want to react. You want to trade with reactions because the market. I say you want to trade with reactions. You want to react to trades. You don't want to just trade because you see a trade or you think it's going to go there. Have a reaction, and knowing what liquidity is will help you understand the market so well. The main things that we hunt, like I said, are previous swing highs or higher time previous sessions high. So now I'm gonna show y'all an example of a previous session high, right? So we're gonna let this play out. Let that boom. We come down. This was a previous session I was telling y'all about, right? Previous time frame session that we sell side liquidity that we wanted to grab. Push down, grab that liquidity. Boom. Okay, now we are. Now, when we get to this high, right? When we get to this high, what I would like to look for, this would be a change in the state for me. Hold on, let me delete these drawings. This would be a change in the state. Boom. Okay, now I don't like this. We're grabbing liquidity right now. Boom, yep. What I would do, we grab liquidity right there, push down lower. Why are we pushing down lower? Because we want to move higher, right? We want to move higher. So buy in here. Now this was a few days ago, so these days were wicky, right? We had a lot of wicks yesterday. It was a choppy day, which you should not be trading on. But have your TP at this previous swing high. You can have it at this previous swing high. And since this is New York kill zone, this trade it should play out very fast. You feel me? Boom, aiming for that high. Boom, TP hit just like that. You see that? You get what I'm saying? And what do we hunt? We aim for these highs right here, right? Aim for these highs. Also, it goes back in with the trading I did that I was telling y'all about. What we have right here, have a sweep of liquidity. Liquidity being swept right here. We also have liquidity being swept over here, right? Liquidity was swept all the way over here, which is this is still relevant because it's part of the market. Or even over here, if you want to look at over here. Liquidity got swept right there. After liquidity got swept, what we have right here, like I said, I wanted to see this high get taken. We have a change in the state right here. Have a change in the state. Then what we do, we entered in on this pullback where it grabbed liquidity right here. Put our stop loss below these lows over here. And had our take profit at the next swing high, right? And more than likely, we're going to use this high as another form of liquidity. And what we're going to continue to do, push up to London highs, right? You get what I'm saying? Let's see if that plays out. Yep, boom. Like I said, we use this previous high right here, this previous time frame high. We use this as liquidity or a resist or a support area now because this was resistance, but we blew past that, and now we got more liquidity that we can grab up here as well. If we want to, you feel? We got more liquidity up there, and you feel me? The market it's attracted to those areas. You feel me? It's attracted to that area. Yeah, boom, just like that. It's attracted to it. So when you are trading liquidity, or you are don't just trade liquidity, but liquidity should be helped to use as for your TP, your stop loss, and to help you build a narrative around where the market is, have a general basis of going, not just, oh, I'm going to put my stop loss here and aim for this. And no game. Liquidity is a confluence that you add that helps you understand the market, because sometimes you can be wrong. You feel me? Sometimes the market, what if the market would have just came, swept out these lows right here and reversed up here? You feel me? Which it could have done, because what did it do? It grabbed liquidity over here. So we really don't need to go down any lower, right? But we haven't taken out these lows, right? The market tends to take out low, like go for lows that we have not taken out yet. That's why it's called liquidity. These orders probably were never filled. So just be mindful of that. That's what liquidity is, simplified by YN. I'm going to make this a series, trading with a YN. I'm not really a young nigga. You feel me? I'm a civilian. Don't kill me. God loves y'all boys, though. Catch y'all in another video. Peace out.